Hey, it's Andreas, and happy Sunday, everyone. So, in an earlier video about StoneCo, a commenter named Florin asked my opinion about PagSeguro. Now, PagSeguro is another digital payment company based in Sao Paulo, Brazil, incorporated in the Cayman Islands. And what I decided to do to give you guys some extra value is spend a couple of hours this Sunday in Excel doing a basic financial model to find out what the stock price potentially could be in 2024 in a bearish case and in a more bullish case. All right, so this will be the juice of the video. This will be the main conclusion that we get to in the end. But remember, these are only projections, and I will walk you through the numbers I use to show you how very conservative these estimates are. All right, so the first thing I did was that I went into earnings reports to get the yearly total revenue here for a couple of time periods. And in order to estimate future earnings growth, I took a look at past earnings growth. And we can see that from the year 2017 to the year 2018, we had earnings growth of 33%, then 29%. Then we actually had a decline of 2% here. And this is terrible for stock price. And if we take a look at the stock price right now, it's at 17.89 cents. So $17.89 as of recording this video. Quite cheaply priced right now. All right, so the second thing that I needed to calculate in order to make just a very basic financial model was historical gross margin. And I did this by dividing gross profit with total revenue. And as you can see here, it's been above and below 20%, fluctuating around. And as a result, I just decided to say, all right, let's say that they have 20% gross margin going forward. All right, so now you see how I use some historical measures to do my future projections. And for projecting revenue, I used 20%. So let's say that 2022 here, we have this amount in revenue in thousands of US dollars. For 23, we grow by another 20%, etc. Multiplying this number with margin gives us earnings. All right. So in order to get to a potential stock price, we still need to do some math. We need to divide earnings with total numbers of shares outstanding. And here again, I made another assumption that will make this even more uncertain. But I just straight up made the assumption that there will be no future dilution, no more issuing of new shares, and also no buybacks. So number of shares outstanding will just continue to be what it is now. And with this, I can multiply earnings per share with a valuation ratio to get actual share price. And here again, I have to make a judgment call and choose what valuation metric to add to the company's earnings. And in this case, I chose price to earnings ratio. And I even brought in this picture here into the Excel sheet to give you guys some history on the historic PE ratio for this company. And as you can see, it has fluctuated quite a bit. Right now, we're at about 25, for Friday. This is the last trading day as I'm recording this video. And you can see that it's been above 80 in the past as well. So, and this PE ratio will also be heavily dependent on earnings growth. So if earnings are growing quickly, then the company tend to be willing to pay a lot more for the current earnings, basically just projecting into the future that more money will come into the owners of the company. All right, so let's say we use 25 then. If we multiply earnings per share with 25, we get a stock price of $25 for this year. Let's say that it reaches that by the end of the year. Not very good. This is a very bearish calculation. And by next year here, 2023, we would reach $30, and then by 24, $36. And I just have to say that even with this very bearish calculation of the stock price being $36 in 2024, it's still quite a lot of upside from the market price today of $17.89. So even in a bearish case, there's quite a lot of upside should the company get their act together in terms of growth and just be at a steady pace of 20% earnings growth on a year-on-year basis. And if we increase to 30%, just like the old days, then well, this stock price will be even greater in the future. And we can change up a lot of things. So what I did for fun was I used another price to earnings ratio here of 50, a bit higher as it has been historically. And if we use this instead, then by this year it would be $50, next year $60, and then 2024 the stock price would be at a new all-time high of 72 American dollars. So this is just how you can play around with numbers. But what I found to be interesting in the case of PagSeguro is that with the current valuation, there's quite a lot of potential upside, even in a more bearish case of slower earnings growth. Now, remember, these are only projections and me guessing what sort of valuation metric and what earnings growth will be, and what the company actually delivers will inevitably end up being quite different. It's just very fun to play around with different scenarios and see what could potentially happen to the stock price going forward. I hope this added a ton of value to your investment process and that you found this video very entertaining. Drop a like, and whatever you decide to invest in the future, hope you make a ton of money. Take care now. Bye bye.